Hey guys, David with GammaEdge here, coming at you with a pre-market prep for August or April 10th, 2025. For those that aren't familiar with our pre-market framework, what we do is we go to our market trend model, then we go through and we analyze the SPX options complex. So with that, getting to the market trend model, this is built off the tick index. It's our way of gauging kind of trend momentum sentiment in the market. As a tick index, is based off of real-time buying and selling in the market. What we do is we create the cumulative tick, which is just the intraday tick index that we create a time series on so we can understand multi-day to multi-week trends. Prior to yesterday, we were in a decisive downtrend lower, and even before the tweet that came out yesterday, we were in a decisive trend lower. Got a little bit of an uptick, a little bit of intraday reversal. We need to see that continue, especially, within the context of being in a put-dominated environment. Yes, there's a little bit of filter tick buying, which is just a measurement of significant buying and selling, but net, we've had filter tick selling for, the last four out of 5 days. So in our opinion, bulls are guilty until proven innocent. So we need to see a significant thawing out of the SPX structure that we'll get to next, and we need to see a continuation higher for a multiple day, multiple week basis before we can think that, the next up move is going to be sustained higher. Next, what we do is we move to the SPX options complex. The reason we analyze this is because options market is inherently forward-looking, so we can understand how speculators are positioned out in time, what their future expectations are. B, we look at the SPX complex because that is the most liquid, deep options market there is. Ton of speculation taking place there, so it gives us a good feel for the overall market. First off, what we do is we look at the SPX complex. That's your AM settled, that's your monthly, that's your quarterly contracts. Overall, the environment is put dominated. It did get less put dominated day over day, just given the 10% move higher we had. But net still put dominated environment. And then just keep in mind that we were gapping down 100 points again, so that's gonna shift the moneyness even more, meaning that those puts are going to become in the money, calls are going to become out of the money, so that's going to shift it to create a more put dominated environment, right? So in the context of our market turning framework, SPXA, still has a ton of work to be done until we can think, yes, this is, kind of bullish foundation is in place. Just another way to visualize that, this is called our true zeros. We have a true delta zero, true gamma zero. These are spot price invariant calculations, meaning spot price does not play a factor in it. And what these are proprietary calculations that help us understand where the balance point between call and put speculators, both in the context of delta and gamma, reside. And so you can see that these ratios have been trending lower. And even in the context of yesterday's move, this ratio still trended lower, which is evidence that call speculation really is not coming in a meaningful way. So we need to see these start to trend higher, which would tell us evidence that hey, call speculation is starting to come back into the market. So a lot of work to be done there. Next, we look at our GEX ratio. Again, this is total call gamma relative to total put gamma on the complex, like the put call ratio, but better as it has a time component, that being gamma, which is inherently sensitive to at the money and closer to expiration. So as an example, a million puts put out 2 years from now, it's going to spike the put call ratio, but the GEX ratio is not going to move really much because those 2-year outputs don't have a ton of impact on the near-term structure, which is what us traders care about. So going back to the GEX ratio today, yes, a little bit higher, but really just bumping along the low still. We need to see meaningful increase higher and even getting above 1, which would suggest that calls are in control relative to puts. Right now, puts are still dominant and still along kind of the bottom of the ratio. So a lot of work to be done there as well. So as you can see, the market trend model a little bit better, but still net on a multi-week basis, still trending lower. SPX complex trending lower. Put dominated. All of our key sentiment indicators are still put dominated as well. Then we move into the SPXP complex. This is like a cigarette boat relative to the SPXA is a cruise ship. Reason it's a cigarette boat is because A, it's smaller. B, this is more of a short-term speculators play. These contracts turn over a lot quicker. This is where your 0DT daily, weekly expirations are. So we can see based off of last night's settlement price, we were kind of fairly balanced, still slightly put dominated, but certainly structure did improve a lot. We can see a lot more call dominated strikes in the structure. However, keep in mind we're gapping down again another 100 points down to 53.30, so that's going to shift the moneyness. This structure is going to become a lot more put dominated, so it really kind of negates what happened yesterday. Nonetheless, 5,300 key strike in the complex just because it's a whole psychological number. There's a lot of positioning around this strike as well, so something to pay attention to. And then, right, just looking at here, looking at our net OI column, this is just a distribution of, call and put speculation throughout the complex. You can see that there's just a ton of back and forth action right now, which is, kind of disorderly in nature. Our transition zones are not relevant at all, and they're really not visible at all because, again, structure is so disorderly. So yeah, there's just another kind of data point along with an elevated VIX, put dominated structures, lack of transition zones, extended from transition zones. So again, we should just continue to expect volatile price action. Then here, last thing we're looking at is this is the 0DT complex. Again, gapping down about 100 points from where we settled yesterday. Thing to note here is, really just minimal OI, open interest, that is. So again, price is free to move about. That's where intraday volume is going to be very critical in understanding, chop versus trending price action, as that's going to dictate a lot of the price action today. There's not going to be those natural kind of market maker, more orderly price actions that we see centered around our transition zones because we're so far stretched from any type of transition zone in the structure that this is where we see more disorderly price action. And, along with the VIX at 30 to 50, just huge intraday volatility should continue to be expected. And, because of that, like there are really no levels for our if then statement right now, just given where we are in structure and kind of the discontinuity within structure itself. Transition zones are not clear. Key upside and downside levels are not clear. So that's really, again, where we're going to have to rely on our intraday volume analysis. And then, frankly, just kind of noting where those key psychological levels are at, 5,300's in play right now, 5,400, 5,350. Those are all kind of good levels that the market's been respecting over the last week or so. With that, wish you all the best of luck today. We'll talk to you later. Thanks. Bye.